This lesson, we are going to be looking at the owner's equity accounts, but again, we're going to be going about it this time from the T-charts, the T-chart approach, to looking at the debits and credits and seeing how each of them are affected. So if we received cash, let me change slides. If we received cash from sales, so like we received $1,000 in cash, or $1,100 in sales. So if we receive cash, that means our debt is, we're going to debit cash because it's coming in. That's a positive for that asset. And sales is also going to increase on the credit side because that's the normal balance side for sales. And the sales is a revenue account. And it's under the owner's equity side of types of accounts. Revenue and expenses all fit under owner's equity. They're all housed in this bubble. The sale was credited because that's the side we increase. So if we're going to sell services on account, the two accounts that are affected are your accounts receivable because we're selling on account to Main Street, so that means they owe us, and we're receiving the sale, so the sale is going to increase as well. So accounts receivable is an asset, sales is a revenue. Assets will increase on the debit side, and owner's equity will increase on the credit side. So if we pay cash for expenses, expenses are going to be an owner's equity, but they will behave differently than other owner's equity. They're going to behave opposite. A normal balance for any communication expense is going to be on the debit side. And so our cash is going to decrease and our communications expense is going to increase. And because the big idea is our owner's equity decreased, and that's the reason it's kind of going opposite of what it should. And so we received cash on account from Main Street Services for $200. So they've paid off some of their debt. That means the two accounts that are affected are going to be your cash and your accounts receivable. Cash is, both of these are assets. Cash is increasing, so we are going to have a debit. At the accounts receivable, their bill is decreasing, so we are going to have a credit. And so this next one, we are going to withdraw for personal use. So that means it's a drawing account. Again, this is going to behave opposite of the other things inside of owner's equity. Because anytime that we're reducing our owner's equity, it is going to be a debit. And so our cash is going to decrease because we're writing a check. And since it's an asset, then it's going to decrease on the credit side. And our drawing account is under the owner's equity, but we are going to, the owner's equity itself decreases, but the withdrawals themselves increase. So just remember that we are going to have that as a debit balance on a drawing account. So the two accounts that are affected when you pay, a business pays cash for a cell phone bill, name the two accounts. You should have gotten communications expense and cash. Which two accounts are affected when a business sells services on account? Accounts receivable and sales. Which two accounts are affected whenever a business receives cash on account? Cash and accounts receivable. Is the drawing account increased on the debit side or credit side? Debit, because withdrawals decrease the owner's equity. Our revenue accounts increased on the debit side or credit side? Credit, because it increases the owner's equity. Now let's get to the assignment. So we are dealing with recording these transactions. So I went ahead and opened up the 2-3 end of lesson assignment. We're going to do the work together. So let's go ahead and unpin the questions. So it starts off again with the account titles, and then we are going to go over to the transactions and go through them one at a time like we did last time. It's going to make that a little bit bigger to make it easier for us to see details. Come on. Okay, so on March 11th, we sold services on account to Joanna Eckerson. So the two accounts, we have our services account, which is our revenue account, is going to increase. And we have our accounts receivable for Joanne Eckerson going to increase. Joanne Eckerson that accounts receivable is going to be an asset, so it increases on the debit side. So I'll list that first. Oops, I clicked on accounts payable. It's accounts receivable. And then we are also going to have our sales account, which is where the sold services is going to go to. In both the numbers, the debit is going to be 125 on the left and the credit of 125 on the right under sales. So let's go on to March 13th. We received cash from sales. So the two accounts, we have cash and we have sales. Cash is an asset. Sales is going to be under the owner's equity, but it's a revenue account. And so it's going to increase on the credit side and cash is going to increase on the debit side. So cash gets listed first. And then we are going to list our sales account. And we received $260 in sales. So list them accordingly. On the 14th, we paid cash to telephone bill. So our cash is going to decrease as we send money out. So that makes it a credit. And we paid cash and then our telephone bill is an expense. And so it's going to increase on the debit side. And that was going to go under utilities expense because it makes more sense for cell phone to be under utilities than rent. Utilities are things that you would use inside your house, inside your building, like your water, your gas. Those are the utilities. On the 16th, we received money on account from Joanne Eckerson. So she's paying off some of her debt. So that's decreasing on her accounts receivable. So that's going to go in because that's a asset. It's going to decrease on the credit side. And we received cash, so cash is an asset. It's going to increase on the debit side. And so we received $125 from her. So I didn't mean to click that spot. Let's see if I can get out of it. And it was a receivable because we were receiving, this is money that's owed to us. Pay cash to owner for withdrawal of equity. So cash is decreasing. Drawing account is increasing. So we increase your withdrawals as a debit, and we decrease our cash as a credit, and $200. And then check your work. Save and continue. And now we'll go on to the next one, and y'all will do this on your own.